Hi, everyone. Welcome to our vlog. Today, we're going to talk about how to set up a small business line of credit.
And if you like our content here today, please like and subscribe to our YouTube channel. And we're going to talk about lines of credits.
Yep.
And first of all, let's talk about what the differences are between a line of credit and a regular bank loan. Right. So a line of credit is almost how a credit card operates, where you have a limit of how much you're able to use, but it's not dictated by a specific lump sum amount. So you don't have to draw on all of the credit at one time. So for instance, to give an example, you could have a line of credit for your business of $100,000, but you may only need $10,000. And so the debt is only $10,000. Whereas a loan will have, you would get the full $100,000 in one lump sum, and you can choose how you want to spend it. But the loan would be for the full $100,000.
Yeah, typically a small business loan is used for a specific purpose, like buying a piece of machinery or a truck or a vehicle. Small business loans can be used for operations and other working capital, similar to a line of credit, but usually there's a specific purpose to a loan.
Yeah.
But like as Michelle said, the line of credit is available for you to use whatever purpose. The best use for it is for short-term borrowing in times of where maybe you're a seasonal business and you need to cover costs for a certain period of time where your cash flow is a little light, or you may have a specific need where you need to have a lump sum amount of cash that you don't want to draw on your reserves in your checking or savings account.
Right. And we always do suggest that small businesses, especially ones that have, let's say, payroll or cash flow issues, to go out to the banks and get one of these lines of credit up front. We say do that early instead of waiting until there's a fire or an emergency where you absolutely have to have it. Because in the event that you do need it, it's quicker to draw on an existing line of credit than to go through the processes of getting one established.
Yes, or any other type of just regular loan. So if you have the line of credit already in place, then you can draw on it once you need it, as opposed to trying to come up with all the documents and go through all that process in time. We say it's in a time of need, so you need a quick turnaround.
Absolutely, yeah.
Getting the cash. Another thing we suggest if you do draw on your line of credit is that you consider this a short-term borrowing, and you come up with a plan as to how you're going to pay this back in you think of it as less than a year, maybe less than 2 years. You wouldn't want to go further than that. And initially when you draw on it, you'll get charged interest right away, monthly, but then try to come up with that principal in a shorter amount of time, whether you term it out over a number of months, or when your cash flow turns positive, gets better, you put a lump sums in there back in to pay it off.
Yeah. So now that you understand what a line of credit is, you may have come up to the conclusion that you need to have a line of credit. We suggest figuring out what bank works best for you. And in many times, the bank that you use should most likely follow where your business checking account is. And that's why in previous blogs and podcasts, we talked to people about, making sure that the bank that you're using when you first start your business is going to grow with you and does have products that are available for your use in your business.
Yeah, having that banking relationship is important to being able to get these loans in place and line of credits in place, and that way it's a kind of a quick turnaround to get these things done that you need to do for your business.
Yeah, and you don't want things like this, like admin things kind of weighing you down all the time, because you want to be out there doing what you do in your industry or field, making money. And so, to keep these, the admin paperwork to a minimum is really important.
Yep,
So,
exactly. Yeah.
So some of the things that the bank will need, let's talk about that. Like, what are the things that the bank's going to ask for when setting up this small business line of credit?
Yeah, the first thing is they're going to want a current set of financials for your business. So balance sheet, profit and loss. If you are a new business, then they're going to want projections as part of your business plan when you go to them to set up your accounts and apply for the line of credit.
Yeah. If you run your books on cash basis, which basically means you record income as you have earned it and as you collect it, and expenses as you pay them, the bank may also ask if you have any accounts receivable, anybody who owes you money.
Yeah,
so
they want to know what the current financial situation for the company is, and that'll help them determine. They use that along with the next piece to determine how much credit they're going to extend to you.
Yeah. So then after you get that, usually you get one email or one discussion with them with a list of things that you need to provide to them. And on that is this, business financials. And then next is usually some sort of personal financial statement. And this is outside of the business. This is the assets and the liabilities that you have personally. And let's talk just briefly about what some of those things are.
Yeah.
What kind of things are considered to be assets, personal assets?
Yeah. So first off, it's your bank accounts, savings, checking, money markets, investment accounts. If you have personal investments, retirement accounts,
which can be like 401ks and IRAs, things of that nature, especially if you rolled them over into, old 401ks into new IRAs, just in your name from old companies.
Yeah, they're going to want to know life insurance, real estate, mortgages, and any of your debts. So car payments, car auto loans, any credit card debt that you have. So it's basically the balance sheet for your personal life. And if you're married, they're going to want both of your information. So it's not just the business owner; it's the spouse as well.
So most of the time, this information, especially the personal financial statement, the banks usually give you a form that you complete. So you would use their form in order to fill this in. It should usually be pretty self-explanatory and easy to do on the computer. They probably have fill-ins most of the time. They even may have a client portal that you can upload or put this information in digitally. So look for that.
Yep. And if it's a bank that you haven't been working with before, if it's a new bank, they're going to want documents for the business. So incorporation documents, EIN numbers, your social security numbers, date of birth, kind of all the demographic information for both you and your business.
Yeah. So the bank takes all this information, puts it together, and they come back to you with what they feel they'd be willing to extend, what level of credit they're willing to extend to you.
Yeah, and that initial number may be a little small if you're a new business, but that's kind of just the jumping off point. And as your business grows, and each year you're going to have to provide new financials, new personal financial statements. And hopefully, as your business grows, they can extend you more credit. But if they do extend you a credit that is, let's say it's $250,000, but you don't want to go that high, you can always lower that amount, to
something else,
a more reasonable amount that you feel is you don't want to get overextended, right? So let's say $100,000 in this case. That too high of a number could also affect your business credit score as well, and may affect the ability for you to borrow in other ways. So you really want to make sure that it's not, you take what they'll give you, but not too much. Know what you need, but not too much to cause other issues down the road.
Right. Especially if you're looking for like larger capital improvement loans in the near future. You had mentioned about using those loans, using loans instead of line of credits to help fund some of those larger improvements or new business lines or something like that. Keep that in your mind as you're doing the line of credit application and what the banks are willing to give you. You do have to look beyond just today.
Right, exactly. And your banker can help you identify, where those issues may lie when ask questions. Say, okay, you're offering me $250,000 line of credit. Is that going to negatively affect me down the road, or how does that affect me down the road if I want to borrow? So, don't be afraid to ask those questions.
Okay, well, thank you for joining us today on our blog. And if you like this content, please like and subscribe to our YouTube channel. You also can find us at moderncpaonline.com. We have a course that we offer for setting up a new business. So it's called Up-Level Your Small Business IQ. And we also have a masterclass setting up, and that can be accessed at moderncpaonline.com/masterclass. Thank you, everybody. Take care.
Take care, everyone.